Good afternoon, everyone. Today is Tuesday, August 25th. This is the Relative Edge where we analyze stocks, crypto, and commodities relative to other assets. Today we got Rich here back with another video. How you doing today, Rich?
Yeah, I am great. Good afternoon, good evening, and good night, wherever you are in the world. This is the Relative Edge, and we got a special report today.
Yes, sir.
We
Thank
are
you guys
back.
for coming back. I know it's been a while since we had our last video. I've been doing a lot of stuff with regards to life, but we're back here and we're gonna try to stay as consistent as possible. But definitely stay to the end of this video because we got some really important news to talk about here. So let's jump right into it without further ado. Let's start with the 10-year yield basis note. So as everyone knows, the 10-year yield, that's interest rates. It runs opposite of bond prices. So as interest rates or bond yields go up, the bond prices go down, inversely correlated. And you can see since 2023, we peaked in interest rates. And since then, we've been trading in this downward parallel channel in which we were watching pretty heavily, where we had the first hit, second hit in January 2025, third hit in May 2026 earlier this year, and then we actually had a break. So this is going to put pressure on the markets. I'm zooming in here, and it looks like this structure, right, is starting to slow down a little bit. It looks like it wants to roll over and retest this upper trend line, which makes sense. I mean, once we have a break, usually price wants to come back down and test the trend line that has been rejected one, two, three times. And even if we were to extrapolate that into a parallel channel, we can see we had one, two hits here. So the first stage is just to see what happens here when it comes down. If we make a new high and go back up, but I want to since we this is actually a close below the previous high here, so that means the next step is probably going to come down here, and then we'll reevaluate from there. Dollar, the DXY. Here, I'll clear this chart just to make it look a little cleaner here. But yeah, the dollar has been playing games this year, up and down, up and down, up and down, but overall has more or less stayed below 100. It did peak above a couple times, which was scary and put some pressure on commodities. The war with Iran definitely put some fear in the markets, and when the world sees fear, they rush to the safe haven currency, which as of now is the dollar until there's a new sheriff in town, which I believe will be commodities. But and you can see that kind of fizzled out really quickly with um, the dollar falling right back below, which was previously support. So support here, it bounced, and then it failed here. Was and now it's resistance, resistance, resistance. Broke above, tried to hold below, tried to hold above, and broke down again. So that means the next area of interest is going to be the previous support here. So I'd say 96. I eventually believe that the USD or DXY will eventually break down, and if we were to put these two lows back from 2017, or maybe if we even go a little bit further out, try to draw some type of trend line there. Let's go from the second low here. See if we can find any trend line here. Not really seeing anything that's good. But the next step obviously is to see if this breaks down from to 96. So we'll see what happens there. Let's move into, and of course, as this breaks down, that's going to put upward pressure on commodities, specifically gold. Let's check out gold. Let's go to a cleaner chart here. Gold, miraculous comeback. Look at this. We topped out in January, went up, closed again higher. Then 1, 2, 3, 4 months down, 1 month sideways, and now we have. If we were to close today, August 25th, the month ends at the beginning of next week. Um, we would be actually engulfing 1, 2, 3, 4 months worth of bars. So that's a engulfing bullish
Strong.
bar right there, which
Yep.
would mean that that's a very bullish signal, meaning that all-time highs could come before the end of the year. So that's something to keep in mind, something to watch. I'm very bullish on gold and silver in the commodities complex. I do think that we are kind of overstretched in the short term. We have seen a roughly 20% move from the bottom. So I wouldn't be surprised to see this come back down to its 200-day moving average. We see the moving average 15 exponential about to converge with the 200-day moving average. So that could mean that maybe there's another emotional move up followed by a sell off, or we just come down, we land, and then do something like this where we come down, test the 200-day moving average, and then make its way higher after that. But it's kind of inevitable that gold will move higher. It's really just a matter of time because of the financial situation that our country and the global economy is in, where we have to keep expanding the money supply to kind of get us ourselves out of problems. But yeah, and then I'll go on silver real quick, and then I'll let Rich take over to go over some crypto and the S&P broader index. Yeah, silver right here, major breakout here from the high of January 29th this year to May 14th. If you were to draw a trend line at the top of each one of these, we can see that we got rejected here, right? But look at this. We actually broke out here. So this is a breakout right here. I'm still looking and expecting that this will go to the 200-day moving average, which would be roughly $71. And that also kind of coordinates with this support level, which was previously support. So when this first took its initial drop from 121, it dropped all the way to 70. So this was support initially. We briefly dropped to below, but support was kind of forming a head and shoulders, inverse head and shoulders, but it failed, right? So this would be the left shoulder, head,
Yep.
right
And a
shoulder. But
descending triangle too.
yeah,
Also.
but we weren't able to break out to the upside, which was actually what I thought was going to happen. So we broke out to the downside. So now what we want to see is this break above this support, and that'd be this resistance, and that would be very bullish. And then the next stop would be the first area of resistance of 90 once we break that. So what I would expect is maybe a break, either a break and shoot right up, or a break and then come back down and test this support one more time before we shoot up again. So we'll see what happens there. But
Ooh.
I will give it over to Rich for some analysis on crypto. We've been seeing some crazy moves there. So I'm interested to see what your input is on that.
All right. Let me just grab this screen. All right, you can see my screen.
Yes.
Yeah, so this is the daily chart, but let me go to the weekly chart. Yeah, we were consolidating for how many weeks? Let's start with this green candle as we move down and hitting resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. Like what is that? 2.5 months. But as the start of the week of the 17th, Look at this explosive move, 23 per more than 23% last week. We had an explosive move, and part of the explosive move was that getting over this uh, level right here, this horizontal resistance level, which we hit once, we hit twice, and exploded through that. And many people was expecting still a move down towards, if I zoom out, towards the bottom of this range. You see this double level line, or even lower around the 52, or even down to the lower 50s, or actually $50,000. They got a rude awakening, and there was a lot of shorts that was piled up. And this was part buying and part short squeeze too, also last week. And as we go down to a lower time frame on the daily chart, as you can see, this is a massive move from from Wednesday, breaking out over this pivot high and kept on going Wednesday, Thursday, Friday, and just moving upward with each day. Was this averaging around between 6 and 7% in each day, and consolidating from Saturday through to today. Now, $80,000 was quite a milestone. There was short started to pile up on this kind of turquoise line right here at resistance. And when you have a hard number like that, usually there's quite a reversal, because they hit it first, um, the first time, and pulled back, and short started piling up, and a couple of things happened while it did a push up today. One, because of shorts that are piling up, there was a short squeeze. In addition to news that came out, they're going to start buying. The Federal Reserve is going to start buying some bonds to stave off any kind of market challenges. To also, so they got a short squeeze, and I have this resistance line to also. So it came close and pulled in, temporary for the day, but we're definitely looking to see a retest of these levels here, which was once resistance, and looking forward to it to be support, especially when we look at historically. Um, we're looking at uh, um, in history, we're looking at not only a pullback, because after a 200-day moving average. Let's see. Let's go to the weekly. Oh, I don't have it quite set up. Excuse me for that. But we're looking at around 75 to 72,000 possible pullback, because historically, when we have midterms, or anytime you have a bear market, which is coming towards the end, you're talking somewhere between October and November, which is coming up fast. And that we pull, once we break through the 200-day weekly moving average, we pull back to it, and then we move up higher. So we're looking for this pullback, and to move much more higher. And also, as you can see here with the RSI, the chart is going up in this exponential move. Right, let's draw some lines here. All right, you got your line there, and while that's going up, the RSI, the strength of the buying, is going down. That is called a bearish divergence. So it is definitely weakening, unless we have some kind of news. Also, government is actually on break right now until the I think it's September 14th in a couple of weeks, where we're looking forward to having the vote on the Clarity Act. The Clarity Act is basically um, giving crypto holders exactly what they need to do to stay in line with the Securities Exchange Commission. They just want to know what are the regulations, what they can and cannot do, and they've been waiting for that for many years. So this is what we have with crypto, and to and note this: when that passes, you're talking it opens the door to much more trillions of dollars entering the market. Because right now, pensions are um, are actually excluded from actually participating in the crypto market. So that opens the floodgates for pensions to actually join in there. So that's what I have for Bitcoin. And let's go to the SPY. What are you doing, SPY? All right, SPY. As we see, let's go to a larger time frame on a weekly time frame. So, definitely looking at see here. It was consolidating for so many weeks, but with a pull down in what's that, June, and pull back up and push down to July. But ever since this push down, this bullish candle on a reversal on this weekly candle continued up and broke through the high of January 2026 and continued to go in. Now, as we see here, um, as this is going up, let's draw another trend line. Looking at the RSI, and we have another trend line as we see the buying is declining. And the effects of that is actually the week before last week and somewhat this week. And as you can see, we're trending below the actual midpoint on the RSI. So uh, I would say um, at least I'm looking for, depending on this candle, the strength of it, that will retest the old all-time high, which is right here. It's at 760.27. But we could go higher with with all the tools that they use in the federal government. As I said before, they're buying bonds because it was ridiculous. What we was talking about Jabari Earth. I think this weekend it's like, hey, listen, let's do a special report about um, how treasuries are being sold off by not just one, but like several countries. I believe like 5 countries were selling off their treasury: Japan, Korea, I think China too also was selling off the treasuries. And so that's not a good thing. They're selling off all these treasuries around the world, and to the point whereby the U.S. has to step in and buy some bonds actually around the world. I think they was buying the Japanese bonds to also the Treasury. Sorry, excuse me. They're buying the Treasuries, Japan. So they're using these tools to support the market and make sure we don't have a crash. But I believe there's underlying things that is going on. The big ticket items is, as we know, is real estate, and um, but we are getting supported, and we can take a look as we saw before that Jabari was showing. The yield is actually coming down, but it was rising, which the interest rate was rising, and you'll have less buyers in the market. But I'm not, well, in my opinion, I'm not fooled whatsoever. I think that there's still going it's still not a buyer's market, it's a renter's market. in terms of the big ticket items to purchase. And I think behind the scenes, which you won't see in major news outlets, is banks. I believe that banks are going to be closing behind the scenes, and because of because of the big ticket items, in addition to people moving into the crypto market, big on stable coins, which the interest rates just in a regular savings account, the average interest rate is like 0.1%, where if you hold your money in a stable coin, use it USDT is anywhere between 3.3% to 4.5%. So um, yeah, that's what I that's what I have. For the relative edge between crypto and the major markets, using the S&P 500 as a barometer. Um, eh, that's what we're looking at.
Very nice analysis there. It sounds
Yeah,
like you might want to get your money out the banks.
yeah, absolutely.
You
Just a
know,
short story. I was a young man who's 14, mentoring right now. He just opened up a can at Bank Santander, and I did a comparison, and it was 0.1. That's how I came up with the numbers to 3.3 to 4.5 comparison to hold his USDT just in Coinbase alone. And so, yeah,
yeah, definitely don't accept those low interest rates. You get
absolutely. At minimum, try to get a high yield savings account.
yeah.
So yeah,
If you're it's like putting your food on the counter versus putting your food in the fridge. Like, don't get me wrong, it's still gonna go bad in the fridge if you leave it long enough. That's the equivalent
yep,
of a high yield savings account, but it will last much longer than if you leave it on the counter, which would be
that's
just a
right.
regular savings account. So, um,
That's right. Yeah, and yeah, or just buy some Bitcoin. Uh, Historically, it's gonna rise. It's gonna outperform. Actually, in this historical in this time historically, Bitcoin outperforms on the S&P 500, and then it will switch back. Yeah.
yep. If the cycle continues, um,
Hmm.
but yeah, let me take
Yeah.
over here.
Uh, give it back to you.
Can you see my screen? Should be able to.
Yes.
Alrighty. So here is the MMRI, or the 10-year yield, times the dollar divided by the golden ratio. Basically just shows risk in the market. I'll zoom out a little bit so you can kind of see what's going on the monthly. And this is the long-term chart, actually, the longer-term MMRI. So basically, risk trading downwards for a while. And we're actually right at what was previously support in 2002. So support 2002, 98, 95, 96. So this is a really important level that we're at, actually, where the
Hmm.
10-year yield, the relationship in the 10-year yield and the dollar, when it gets to this level, like, we need to be watching what's going to happen here. And then we even were rejected a couple times, and then we traded down in this downward channel. But to zoom in, looks like we are kind of breaking down here. I had to say myself, I'm going to zoom into the daily chart, because I've been watching this pretty frequently, even though I haven't been making these videos. But because we were going in an uptrend, finding support in an uptrend, um, and then we broke above the previous high. So I thought this was the high right here on
I
May
remember.
26th, on
Yeah.
May 19th. But then
Uh-huh.
I thought this might be like a wick, a topping tail. But then we
Yeah.
came up above, and we actually closed above. But look at this. We're slowly leaking down. We're slowly leaking down, and now we're below this, which was a previous high. So that tells me that we're gonna go trade down to this previous, because this was the previous high before this high, right? So this was the previous high on March 30th. That's where that tells me that the interest rates in the dollar are gonna come down. When the interest
Mm-hmm.
rates got this high, this is when we started having problems with Japan, their bond market. Our interest rates are too high, and then that's when they started talking about buyback programs. So I wouldn't be
Right.
surprised to see this drop really hard. What that's gonna do, that's gonna light a fire underneath the stock market and
Mm-hmm.
gold and silver and potentially crypto. We got to keep
Mm.
an eye on those charts. What I am,
Yeah. I hope they have enough tools to stave it off. You know.
yeah,
Uh,
but
yeah. Just gotta keep abreast of the news of what's going on in
yeah, I
those
mean,
markets.
if you look here, we're below the 50 now, so this is favoring a downtrend
Okay.
here on the
Good.
RSI. So, but one thing that's very interesting is like, okay, do I want to be now that I know that they're going to start printing, right? This is going to come down, right? Assuming this continues down. Do I want to be in gold or do I want to be in Dow Jones? Do I want to be in stocks? And look at this. We were trending
Oh.
higher for so long
Mhm.
since March 12th. And now we've broken out of this channel. We're now coming back down. The next area of support is 11. Honestly, I didn't even see it getting this high. So the fact that it got this high was kind of remarkable. But we are clearly breaking down here. If we zoom out a little bit, go to the weekly chart. This is a strong break. And if we even go to the monthly chart, you can see that this has been in a downtrend for a while now, actually. That we since since November 2000,
Mm-hmm.
since March 1999, this has been
Wow.
going down. We had a dead cat bounce here, a lower high here. Now it looks like we're gonna make a lower low here. So it's only a matter of time before the gold starts outperforming
Interesting.
the Dow. And people that argue that it's better to be in stocks than than gold, if you look at this chart since 2000, it's been a better
Uh-huh.
it's been better to be in gold. If you say
Yep.
since 2011, yeah, I mean technically it's been better to be in stocks. But right
Yep.
now we just made a lower high. This is a rounding top, a lower
Yep.
high here. We're gonna make a lower low. So um, Dow silver, kind of like the same deal here.
Yeah. Yep. The charts don't lie.
Yep.
It's price action.
And one indicator that this is going to keep going because in a gold and silver bull market, silver outperforms gold every single time because silver follows gold. It runs at a scalar. So a declining gold silver ratio, meaning that silver is outperforming gold, means that we're in a gold and silver bull market. And so let's check out this gold silver chart. I'm gonna zoom in so though my lines aren't as confusing here. Kind of explain to you my thinking here. So we were trading down since uh, April 2025 in this downward channel. Broke lower. Actually, want to maybe drag that up just a tad bit. We broke lower. We were trading in this what I thought was a bear flag. All right. This is a down move followed by solid sideways consolidation. But then we broke above what was previously resistance right here. Resistance, we got rejected. Resistance, we got
Mm-hmm.
rejected. Resistance, we got rejected. Now look at this. We broke through support. Now I thought
Mm-hmm.
from this you would think that, oh, maybe this might push higher. But no, we are still consolidating right on this support line. So
Mm-hmm.
once this breaks, silver is going to pop hard. And you can see the last time it broke down, it hit this lower trend line right here.
Mm-hmm.
So that's the next area where I believe this is going to drop to. Let's check out silver versus the DXY. Silver versus DXY. And we can see there's a clear break here. right here, because we bounced January 28th, 2026, then again in May, and now we broke that trend line. So this is showing me that silver is gaining momentum. I wouldn't be surprised to maybe see it test the underside of this trend line and then roll over again. That's what I'm expecting. So what that means that we may see a short-term pullback in commodities, silver and gold, and then followed by a move straight back down. The silver oil chart. This is the one that Rich and I have been going back and forth on who's going to be right here. Honestly, we've both been right up until this point.
Yeah,
Back when this was trading in this pennant, which you can make multiple arguments for, because you can say this is a
yeah,
falling wedge, which means that a breakout would lead to a higher price action, or you could say this is a bear flag, whereas the down move and sideways consolidation. So both arguments make sense here. So it's really tricky saying which one is going to win, silver or oil. But I tell you
yeah.
what, in an environment where we're seeing lots of money printing, I'd like to be in both of these assets, both
Yeah, well, it's
silver.
going sideways, so that kind of makes sense.
Yep,
Look at the range.
yep. And
Look
I
at the
mean,
range.
look at this. If you look back, let's zoom out a little bit.
And it seems like the new
Commodities.
normal right now, until the war is over. Who knows when that's going to end?
Well, like if you look back over the years, commodities or silver and oil have traded in this continuous range, meaning that they're like relatively correlated to each other.
Uh-huh.
Sideways price action means that they're more or less moving together in a horizontal
Yeah.
range. So now we've broken out of this range, and that's what leads me to believe that this is a new trend. Um, if we were to come lower, right, if we were to break down, we're going to test this lower trend line, which honestly, I'm surprised that this break right here, lower, didn't come down and test that, but we somehow came back in. So now we're trading in a megaphone pattern where the highs are getting higher and the lows are getting lower. So we'll see. I'm gonna move to the daily chart. Right now, I'm still favoring gold. Silver is gonna beat oil, especially if we break above this line. But right now, this has proven itself to be resistance. Because before it was what, support, 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 and then we broke through. Now it's resistance. So the key is to see if this is resistance again. One thing I'm looking at is the RSI. We were converging here on the RSI, converging, converging, converging. We broke lower, which I actually believed that we were going to go higher here. But we had a false break to the upside, then a false break to the downside too. And now we're
Mm.
back in this indecision in which silver and oil are kind of trading in tandem, high
Mm-hmm.
correlation.
Mm-hmm.
So I want to see which asset's going to outperform. Right now, it's too early to call. I want to see this break above this trend line. And then silver versus silver miners. This is a very key chart here because this is a level that once we break below, we see the floodgates open. And I'm going to zoom out here just so you can see what I'm talking about. All right. So historically, when we break below the ratio of 2.2 silver to silver junior miners ratio, the last time this happened, or the first time this happened, was 2016 on this chart. We had one, two, three strong months down. Here we came up against this level, couldn't get through it, and here it was shown to be support. We broke through, bounced, but now we're coming back down here. So my question is, especially if we close this month below that trend line, we could get another gush down. Something similar to what we saw here, where we see 3 consecutive months of silver miners outperforming silver, which means that silver miners are going to rip higher and silver is also going to rip higher. But we're no longer trading sideways. We were trading sideways since, you can say, since November 2025. We've been trading sideways, sideways, sideways. Now we are in what I would say is a downtrend. You can even clone this line right here, drag that down, and it looks like this is like a parallel channel that we're kind of trading in right here. So
The
keep in
RSI
mind,
looks interesting too, also on that near term downtrend where you got a low and a higher low on the RSI.
yep, yep, yeah. So
Yeah,
that could mean a potential come back up and test the upside of this trend line, which would mean that silver and silver miners are going to sell off. That would be a good buying opportunity. So I think that this is very close to being an extreme buy, if not already is a buy. Now that we are closing below here, and then the confirmation would be this final trend upward trend line here. But yeah, and then I want to go into silver versus or Bitcoin versus gold because I think this is a pretty interesting chart here because people debate whether Bitcoin or gold is the better asset to be holding. If you're looking at since Bitcoin's inception, Bitcoin's been the better buy, right? If we
yep,
just draw a
yeah,
horizontal line,
over every financial asset,
yeah.
actually.
So
Yeah,
if you look at this, this is the top. So since pretty much December 2020, gold and silver or Bitcoin and gold have more or less traded in tandem. It we peaked basically. Why isn't this?
hmm
We peaked basically in 20 in early in late 2024, December 2024. So my
hmm
question is, if we can stay above this trend line, Bitcoin's a hold. If we break below this trend line, that tells me that gold is going to be the winner. But one thing I'm seeing here is if you look down at the RSI, and I'm going to make this bigger here because this is important. All right. Look at this. What happens when we get a break of this RSI downward trend? Bitcoin breaks out after that. Like you
yeah,
can you can even make
and it's
another one
only
right here.
because of the cycles. You know, the 4 year cycle.
Yeah. So you can argue there was a break here, we had a strong move up, break here, strong move up, break here. The question is this going to lead to another strong move up where we make new highs? But the last time we had a break, we didn't make much of a new high here versus gold.
hmm
So that's going to be something to watch. If you're looking at silver versus other stocks or commodities, silver versus Nvidia, I'd watch this. I'd watch this chart heavy because since
Interesting.
January 2026, silver's been losing to Nvidia, but now silver is beating Nvidia because we broke out this trend line here.
Yeah,
Same
that's strong.
same with Google. So
Yeah.
silver is winning now against Google and Nvidia. I want to see silver versus SPY, and you can see we were forming if we had a down move, strong down move where silver pumped, sideways
Yep.
consolidation, bear flag, psych, it popped up above support, now resistance or above resistance, now support. But look at this, we're breaking back below, which
Yep.
means that silver could potentially go on a big run here. Silver
Yep.
could potentially go on a big run. Either silver goes on a big run or the S&P 500 sells off. But this is telling me that silver is going to beat the S&P 500. We are below the 50 on the RSI. So right now the better asset to be in is silver over the S&P 500. So I'm taking commodities over stocks right now. Um,
Yeah.
and when Bitcoin kind of shows a little bit more, I'll get back in there. And just one more quick one. Sol BTC. This is Sol BTC chart. Solana is one of my favorite crypto assets,
hmm
and Solana really hasn't done too much in terms of outperforming Bitcoin since 2023. Since then, it's been kind of trading in this sideways range. If I were to draw a line here, pretty much hasn't gone much higher than this area right here. So this is my Oh, didn't mean to do that.
Yeah, I think there's going to be a shift as as we get closer and closer to regulations. The sentiment is when you're picking cryptocurrencies outside of Bitcoin is infrastructure and institutional grade.
Mm-hmm. Yep.
So, um, but primarily Bitcoin, with the institutions, the ETFs and such for these large institutions, it'll get there. And plus, the way how it looks right now, you're in a range right here as you illustrated there. Consolidation is always you're trying to figure out the um, which way it's going to go. So it's picking up. It's
Yep.
definitely um, picking up. There are more shorts in Bitcoin than Solana. It's that big move with Bitcoin.
Yep. Yep. Exactly. And you could argue. I mean, you could argue there's a little inverse head and shoulders action maybe on Solana BTC chart.
Yep,
You got the
absolutely.
left shoulder, head,
Yep,
right shoulder. So
that's right.
a break above this point four level, that's a buy on Solana.
Yeah,
That's a buy on
yeah.
Solana. If we break this, I'm back in Solana. Right now,
Uh-huh.
I'm waiting on the sidelines. So I want to see
Yeah. Why
Solana
do you
is not
choose? Why do you choose breakouts as opposed to um, buying on support?
because right now I'm favoring commodities over crypto.
Oh,
Um,
okay.
and
Fair enough.
until I see some more price action that leads me to believe Bitcoin is out of its dump phase, which
Yeah,
I'm getting more and more info that that's the case. Um,
yeah,
I want to wait a little bit. And when I do go back in, I'm not going to be buying Bitcoin. I'm going to be buying Solana because I think Solana has
yeah.
much more upside. Um,
Yes,
so I don't
especially the infrastructure that they're building in terms of tokenization, meaning you can trade equities on the Solana chain.
exactly, exactly. And I think that crypto is kind of on the, in terms of assets and risk, crypto is definitely out on the risk curve. So
Uh-huh.
when it comes to buying, um, I want to be very, very conservative here because I
Hmm.
actually got out of Solana in October and November last year around here, where Solana was around $200. And I thought that it would continue higher, and it failed to. Um, so I got out at a good time. I rotated into silver, which honestly has been flat, which is crazy to say because it ran all the way up to 120 and came back down. But
Mm.
at least I haven't taken the L of Solana going from 200 to 75, where now it's back at basically 100 now. But I still would have lost half my profits had I
Oh, that's
held.
the relative edge, man.
Yep, that's what these relative charts they give you a little bit of an advantage in terms of seeing things
Yeah.
before they happen. So if you
Mm.
see if you see Solana starting to underperform Bitcoin and Solana follows Bitcoin, that means that maybe we should take some profits here because I want to be in Solana when it's outperforming Bitcoin. That means Bitcoin is going up because we never see Solana just run up 30% without at least Bitcoin going up 5-10%. We don't really see that. Um, so they follow each other. Just like silver follows gold, the crypto altcoins follow Bitcoin. So yeah, that's all I really got for you guys this week. I appreciate you guys tuning into the relative ed and sticking with us to the end. Hopefully, you guys learned something new from this, and we're definitely gonna be posting more as time has freed up a bit. But yeah, I appreciate it. Any final words there, Rich?
Yeah. Well, manage your risk at all times and protect your capital. And this is the relative edge.
Yes, sir. You
Yeah.
guys have a great one.
All right. You take care.
Bye.